Today in crypto. Following Bitcoin's incredible rally towards over $41,000, the world's largest cryptocurrency has been consolidating around the $33,000 range at the time of writing. After Bitcoin recorded a new all-time high, its price has dropped around $1,000 within a day, and has seen recovering on Jan 12. However, Bitcoin has wiped out its gains from the week before, and is now down by 7% in the last 7 days. While institutions have slowly entered the cryptocurrency realm, many still speculate over Bitcoin's possible future, and whether it would follow the same path as it did after the parabolic bull run in 2017. On-chain analyst and CTO at crypto analytics firm Raphael Schultzcraft explained that this bull run is different from the one seen in 2017. He explained, "Were #Bitcoin investors that bought the 2017 top desperately waiting for new ATHs to cash out and leave? I don't think so." $BTC supply last active 3+ years, includes the 2017 top, is at 35%, still rising, and showing no signs of slowing down. As there are more reluctant Bitcoin sellers during this bull run, senior strategist at Bloomberg, Mike McGlone said that BTC would be less prone to steep corrections this year than in 2017. He explained that the current Bitcoin's bull run is more mature than the one in 2017, which would see less steep corrections during its price discovery process. Anthony Pompliano believes that institutions and corporations will continue to push Bitcoin's price higher in the near future, as Bitcoin supply slowly diminishes. He expects that there would be at least 20% to 30% dips in the market along the way. Cryptocurrency trader Michael Vandepapa predicts that Bitcoin's volatility would start to slow down in the coming period. He added, "In the most likely case, the volatility starts to drain away on the #Bitcoin markets in the coming period." Crucial levels to watch are $36,500 to $37,500 and $29,000 to $30,000. However, as the volatility drains away, $BTC pairs of #altcoins will start to take over. Good times. Although he predicts that volatility could likely slow down ahead, and prices would see less steep plunges, he continues to warn that the crypto markets, much like other asset markets, behave in cycles, and corrections will still be ahead. He explained, "Institutions are buying into the #Bitcoin markets, as they are the big player during this cycle and will push the markets up higher than we expect, probably $250,000 to $350,000 peak high." However, markets behave in cycles and corrections will still continue to occur. When transferring Bitcoins, we all need to communicate with the receiver's Bitcoin address. Bitcoin addresses are anonymous and do not contain information about the owner. Almost everyone who has been in contact with Bitcoin for a period of time has dealt with different types of Bitcoin addresses. Anyone can generate Bitcoin addresses for free. You can also use an account in an exchange or online wallet service to obtain a Bitcoin address. You can also choose to generate it offline and store it on paper or in a hardware wallet. But do you know that there are 3 types of Bitcoin addresses? They are, respectively, legacy, P2PKH, format. The address starts with 1, which is the address format used by Bitcoin since its original source, and it is also the most common address format. As for P2PKH, it is an abbreviation of Pay to Pub Key Hash. Nested SegWit, P2SH, format addresses start with 3. From this format, we can't distinguish whether they are multi-sig addresses or segregated witness-compatible addresses. P2SH is the abbreviation of Pay to Script Hash, and it supports more than legacy functions with more complex formats, such as specifying multiple digital signatures to authorize transactions. Native SegWit, BH32, format. The address starts with BC1 and belongs to the local SegWit address format, an address format developed specifically for SegWit. Some exchanges may not yet have an address that supports this format. At present, there are 3 types of Bitcoin addresses in this format. The BH32 format is the least common of the 3, since more transaction data can be stored in a single block, and the BH32 format address itself is compatible with SegWit. No extra space is needed to put the SegWit address into the P2SH address, so the average cost of sending Bitcoin from this address may be lower. BH32 was defined in BIP 173, Bitcoin Improvement Proposal, used by Bitcoin code developers, at the end of 2017. One of the main features of this format is that it is case insensitive. The address only contains 0 to 9, AZ, so when you enter the address it can effectively avoid confusion and make it easier to read. Since the address requires fewer characters, the address uses base 32 encoding instead of the traditional base 58, which makes the calculation more convenient and efficient. Data can be stored more closely in the QR code. Bit32 provides higher security, better optimizes the checksum error detection code, and can minimize the chance of invalid addresses. What is SegWit? SegWit is a soft fork that occurs on the Bitcoin blockchain. SegWit, Segregated Witness, is an upgrade protocol developed by the Bitcoin community in 2015 to solve the scalability problem faced by the blockchain network. It was officially implemented in August 2017. Its central idea is to reorganize block data so that signatures are no longer stored with transaction data, so that more transactions can be stored in a single block to increase the transaction throughput of the network. A change to WhatsApp's terms of service has triggered a mass exodus from the messaging platform to more private and independent rivals like Telegram and Signal, which have registered millions of new users over the last week. Rather than agreeing to new terms specifying the app's right to share user data with Facebook, Nasdaq FB, millions of WhatsApp users simply gave up using the platform, abandoning it for less intrusive competitors. Telegram alone has been downloaded 25 million times in the last 72 hours. Continue reading on Cointelegraph. The cost of one Bitcoin could end up plunging below its 2017's record high of $20,000. That is, according to a pseudonymous analyst, who determined the cryptocurrency's bearish outlook based on a classic head and shoulder pattern. As of early Wednesday, BTC/USD had painted 4 out of 5 key components that confirm the said reversal indicator. They included 3 peaks with the middle one larger than the others, supported by a so-called neckline. Bitcoin H&S pattern and its breakout target area, as highlighted by mCrypto. Source: TradingView.com. The statements appeared following Bitcoin's latest pullback from its sessional resistance area above $36,000. The price plunged to as low as $32,309 on the Coinbase exchange as traders assessed profit-taking scenarios. That was visible in Bitcoin's on-chain metrics. Ki-Young Yu, the chief executive of blockchain analytics firm Quant, confirmed that the latest BTC/USD correction coincided with miners dumping their holdings. Meanwhile, exchanges witnessed fewer stablecoin deposits, and the Bitcoin flow into the over-the-counter wallets slowed down throughout this week. "We might have second dumping," stated Mr. Yu just right before BTC/USD plunged towards $32,000. Mainstream traders and analysts agree that a meaningful price reversal is less likely to emerge from a shorter-term head and shoulder pattern, the one spanning between a day to 3 weeks. Meanwhile, the longer-term patterns active for at least 6 months mark the return of bears. Volume is likely to play a key factor in determining Bitcoin's current H&S pattern. A breakdown below the neckline support accompanied by a spike in trades would more likely validate $20,000 as its downside target. On the other hand, meager volumes on any negative breakout would mean a rebound towards $35,000. Meanwhile, analyst Johnny Mo sees a bullish reversal, noting that the H&S pattern may turn out to be an ascending channel indicator. Bitcoin ascending triangle outlook sees price back at $40,000. Source: Johnny Mo. Worth noting we're still inside this more localized downtrend, he explained. "I would like to see this downtrend broken to add a little more pattern confidence." Ethereum struggled to clear $1,150 and started a fresh decline against the US dollar. ETH price is currently trading well below the 100-hourly SMA and $1,100. Yesterday, we saw a decent recovery wave in Ethereum, Ripple and other altcoins. ETH price broke the $1,080 and $1,100 resistance levels. It even spiked above the $1,120 level. However, The bears defended a major resistance zone near $1,150 and the 100-hourly simple moving average. A high was formed near $1,152 before the price started a fresh decline. There was a break below the $1,120 and $1,100 support levels. Ether price even declined below the 50% Fib retracement level of the recovery wave from the $910 swing low to $1,152 high. There is also a key bearish trend line in place with resistance near $1,070 on the hourly chart of ETH/USD. If there is no upside break above the trend line resistance and the 100-hourly simple moving average, there is a risk of more losses. An initial support is near the $1,000 level or the 61.8% Fib retracement level of the recovery wave from the $910 swing low to $1,152 high. The next major support is near the $950 level, below which Ether price might continue to move down towards the $900 and $880 levels in the near term. If Ethereum breaks the trend line resistance and $1,100, it could start a decent increase. The main resistance is still near the $1,150 zone and the 100-hourly simple moving average. A close above the $1,150 level and the 100-hourly SMA could change the current bias. The next hurdle for the bulls above the $1,150 zone is near the $1,220 level. Technical indicators: hourly MACD. The MACD for ETH/USD is struggling to gain pace in the bullish zone. Hourly RSI. The RSI for ETH/USD is still below the 50 level, with a bearish angle. Major support level $1,000. Major resistance level $1,150. Hit the like button and subscribe to the channel.